Welcome back, friends. There's been a lot of heartburn about Immatics in our community, and we have had some comments exchanged with some of our subscribers. So I thought let's do a little bit of a feature on Immatics. To begin with, Immatics gained 68% from 19th of July 2022 to peak at $13.37 on 8th of August 2022. The company announced Q2 earnings on 9th of August, and since then the share price has fallen 14% to 11.71 at the time of this recording. So how good is Immatics? What is its cash position? What is the reason behind this fall? Let's find out. Let me start off with the answer right off the bat. The reason for the fall in share price of Immatics is that the company delivered below expectation on both top and bottom line. And the way the market is right now, if there is any bad news, the companies are punished immediately. And we have seen that with many companies after they reported their Q2 results, even after making good revenue, if they were talking about a weak outlook for the next quarter, that was sufficient to punish those companies. So Immatics is no different. EPS came in at minus 23 cents as against expected minus 8 cents per share. That's a drop of 186.9%. And revenue came in at 18.04 million versus expected 25.34 million, down 28.82%. This despite the fact that they got a handsome down payment with one of their collaborators during this quarter. That, however, is not the whole story. As always, markets tend to overreact. The run-up before the earnings was very aggressive, and the sell-off now is a knee-jerk reaction in my humble opinion. Since we have not covered Immatics in our channel so far, let me include a company profile as well. What does Immatics do? Immatics is a genomics company that develops CAR-T therapy to target cancer and tumors. Cancer Prevention and Research Institute of Texas contributed $19 million, and parent company Immatics Biotechnologies GmbH of Germany contributed $40 million towards a total seed capital of $60 million and established Immatics NV. They have a good range of collaborations in place. Let us quickly review this collaboration in chronological order. The collaboration, in my opinion, gives a lot of strength to Immatics. All the collaboration started in 2015 when they entered into a strategic partnership with the University of Texas MD Anderson Cancer Center to develop multiple T-cell and TCR-based adoptive cellular therapies. These therapies were to be both autologous and allogenic. MD Anderson shared their significant clinical oncology and cell therapy expertise, including providing information to use the cytokine IL-21 for expansion of T cells, a gamma delta T cell platform for allogenic cell therapy approaches, and various technologies designed to optimize the development of CAR-T therapies. Let me talk to you a little bit about the IL-21 cytokine. So the background is as follows. T cells are extracted from the patient's body. Then they are modified to give them receptors. And in the meantime, a process called as lymphodepletion is performed on the patient's body to remove immune cells, immune defense. And then the patient receives the engineered T cells. And after receiving the engineered T cells, IL-21 is administered over a period of 14 days in order to prolong the life of the engineered T cells that are put into the body and help them to engraft within the patient. So that's the benefit of having a cytokine IL-21. And this is the contribution from MD Anderson. So with that said, in mid-2018, Immatics received $54 million as down payment to conduct joint research funded by Genmab to combine Genmab's proprietary antibody technologies with Immatics TCR technology platforms to develop therapies against 3 proprietary targets. In mid-2019, they got into a collaboration with Bristol Myers Squibb, BMS, and the strategic collaboration was to develop cell therapies with Immatics. This came with a $75 million upfront payment. Shortly thereafter, in February 2020, GSK entered into a strategic collaboration with Immatics to develop therapies. This came with a $50 million upfront payment. And end of last year saw Immatics and BMS enter into global exclusive license for Immatics TCR bispecific program IMA 401. This came with an upfront payment of $150 million to Immatics. In June of this year, Immatics and Editas Medicines entered into another strategic research, collaboration, and licensing agreement to combine gamma delta T cell adoptive cell therapies and gene editing for the treatment of cancer. Payment details are not yet available, but Immatics will receive revenue from BMS. Also in June, Immatics entered into strategic collaboration with Editas Medicine and entered into a licensing agreement to get rights to use CRISPR technology and intellectual property from Editas towards that gene editing treatment for treatment of cancer. In this case, an undisclosed sum will be paid by Immatics to Editas, but it gets them an additional tool to use in their therapy. So we'll get to know what the sum was either through Editas or through Immatics in due course. Immatics has a proprietary cancer cell target platform called XPresident and TCR discovery platform called Acceptor. The company's thesis is that for the safe development of any effective TCR-based immunotherapy, two fundamental steps are required. In my opinion, the branding is a good move because most CAR-T developers follow more or less the same two steps. What is impressive, however, is their large target discovery databases that covers thousands of cancer and normal tissue sampling, covering most relevant organs that provide them multitude of in-depth data sets. Now let us visit their pipeline page to get an idea of their progress so far. Now here we are in the pipeline page for this company. I'm going to expand this a little bit so that you can see it clearer, hopefully. Now you can see that there's three therapies in phase 1B, which is the most advanced stage for this particular company in the clinical trials. They still have a couple of phases to go. So that is still a lead time for this company to get at least one FDA approved therapy. There are also some pipeline items which are with collaborators, and the name of the collaborators are here: Bristol Myers, GSK, and Genmab. So those collaborations are also laid out here. But IMA 203 and all the three IMA 203 candidates are owned therapies, which is 100% owned by Immatics. Let's start with the first therapy out here. We'll zero in on that. And there is a diagrammatic explanation. It's similar to what we have seen with CAR T cells. The receptors are there, and they latch onto the antigen and release cytokines to kill the tumor cell. And if we were to go down here in the clinical trials section, it says the objective of the phase 1 clinical trials with the ACT engine product candidates IMA 201, 203, and IMA 203 CD8 is to evaluate safety, tolerability, and initial signs of clinical and biological efficacy in target-positive solid cancer patients. The clinical trials continue to actively recruit patients. So that's what is happening with regard to these three candidates out here. And if we were to scroll down further, we have bispecifics called TCER IMA 401, which is in an advanced stage of development. It's in clinical trials. It's in partnership with Bristol Myers Squibb. So let's get into that and see. It's a different class of therapy. Immatics TCR bispecific product candidates, also called T-cell engaging receptors, TCER, are off-the-shelf biologics that leverage the body's immune system by redirecting and activating T cells towards cancer cells expressing specific tumor targets. These novel biologics are engineered to allow any T cell in the body to become activated and attack the tumor regardless of the T cell's intrinsic specificity. And the way it works is depicted in this diagram. As you can see, this is the T cell recruiter, TCER product from Immatics. It's injected into the patient, and it makes a beeline to the tumor cells and gets lodged onto it. And then the next step for it is to attract any T cells that is in the surrounding area and latch onto it and recruit it to release cytotoxic lytic granules, which will kill the tumor cell. So this is a novel approach, and this harnesses the body's own T cells and gives it a target to attack and kill, and the target being the tumor cell. So this is a novel approach. This is off the shelf, and this is going to be much easier to manufacture, deliver, and you already know my theory about allogenic versus autologous. So this is more of an allogenic therapy, in my opinion. And let's go back to the the pipeline. So they need to advance one of these pipeline items and get FDA approval in the next 12 to 16 months time period before their money runs out, or they need to meet some milestone targets for either Bristol Myers Squibb or GSK or Genmab in order to get payments which can boost their cash runway, or they will have to get into debt, because right now they're debt free totally. So it's a cash rich company. It doesn't have any debt, so it has that option. And finally, they could go for equity dilution by issuing more equity shares and generating some more money in order to progress. So overall, I am not too much worried about Immatics. The latest result, of course, is a bit of a setback, but looking at the parent company and the collaboration that that Immatics has, I think that this company will definitely succeed. Of course, there is going to be a bit of risk, but I think I would not be too much worried about it at this stage. Now, before I proceed further into financials and all, I want to talk about this branding approach that they have. So let me get some Immatics terminology in place. ACT stands for Adaptive Cell Therapy. Ex-President is a registered trademark. It's a platform for picking a true cancer target that is naturally and specifically expressed at significant levels on the tumor. This is what many companies do anyway, but they have branded this this methodology as Ex-President. And Acceptor is another registered trademark. It's a platform for developing the right potent TCR that specifically recognizes the selected cancer cell target with minimal or no cross-reactivity with healthy tissues. And then they have another registered trademark, which is ACT Engine, which denotes a personalized approach in which the patient's own T cells, so this is autologous approach, are genetically modified to express a novel proprietary TCR, an approach also known as TCRT, that is T cell receptor engineered T cell. The modified T cells are then reinfused into the patients to specifically engage with the tumor. They also have another registered trademark called AC-Tallo, which advances the ACT concept beyond the individualized manufacturing and is being developed to generate a next generation of cell therapies which are allogenic off-the-shelf cell therapies. They have TCR bispecifics, which is a terminology they use to denote engineered off-the-shelf biologics designed to bind patient circulating T cells and move them into close proximity of the cancer cells to destroy them. A TCER molecule consists of a portion of the TCR which directly recognizes the cancer cells and a T cell recruiter domain which recruits and activates the patient's T cells. So you can imagine this particular TCER molecule to be like an adapter. On one end, it latches onto the cancer cell. On the other end, it latches onto a T cell and then induces the T cell to release cytokines to kill the cancer cells. This I'm really impressed about this approach, and this makes the treatment much more simpler and easier, and it can be done for a variety of antigen targets, in my opinion, based on what I have read here. So all that makes me feel that this company has got a lot of intellectual property and they have got novel approach, and they're also going into branding, because what this company has done is what other gene therapy companies also do when they are doing CAR-T. They identify the antigen and then they design the receptors to go and latch onto the antigen and so on. But putting a trademark there and branding the platforms, that puts a lot of structure into place, and it's much better presentation and potentially helps to sell the platforms as well. Now let us look at their financials. Cash and cash equivalents as well as other financial assets of this company total to around 337 million as of June 30th, 2022. Immatics does not have any debt on its balance sheet. It has got zero debt. So it's that, in my opinion, is a big strength for this company, especially a genomic company in this kind of a environment where interest rates are going up. It's got no debt, so there is no debt burden on it. There is no interest payment burden on it. So that's a very big positive. The street expectation was for Immatics to turn profitable in 2022, and the latest EPS and revenue miss have not inspired confidence towards the goal. As a result, the share has taken a beating, and that's what you have seen in the last few days in the market. However, the debt-free cash balance of the company is sufficient to provide cash runway well into the second half of 2024. Also, milestone payments from collaborators can happen during this period. If you look at the share ownership pattern, the general public holds 27.8%, venture capital or private equity holds 26.2%, institutions hold 22.5%, hedge funds hold 13.4%, and private companies hold 5.6%. And the individual insiders hold around 4.5%. These are executives and employees working within the company who hold Immatics shares. My conclusion is that Immatics has great backing. It has got great collaborations. It has got great intellectual property and 5 therapies in clinical trials. The Q2 earnings have increased risk factors in this company, but as all genomic companies, they just need one therapy to get approved by FDA or upfront payment from any collaborations to improve their financial profile. It could be existing collaborators where they get a milestone payment, or it could be a new collaborator who gives upfront payment. Investment in Immatics is not without risks, but the same is true for all genomic companies. Even investing in a company like Apple, for that matter, is not without risks. There are always ups and downs in the market. In my personal opinion, if an investor was interested in Immatics, that investor should form a small portion of the portfolio in which they can hold Immatics, and it should be bought with a long-term view. There is no short-term gain out here, and it should be a smaller portion of your portfolio so that even if you lose the money, it's not going to cause any big problems for you. But at the same time, if it was to come up with an approved therapy, the returns are going to be fantastic. It will be a very big multiple in terms of the returns. So that's my opinion about this company. Now let's take a quick look at the charts for IMTX. So here we are in my TradingView platform looking at IMTX. This chart is a multi-year chart with each candle being a one-day candle. And as you can see, we have significant bull channel all the way from 18th of May onwards. And we have been continuously going up with a little bit of dips here and there. And if you notice, the spike in the price for Immatics from 18th of July has been very, very steep. Any company, however strong it might be, if it goes through this kind of a steep upward price movement, then there is always a bit of profit taking. And on top of it, we had this Q2 earnings on 9th of August, which came up with a bit of disappointment. But still, as you can see, as of today, which is the 12th, 3 days down the line, the share prices have stabilized. And what we have formed here is a Japanese candlestick. I think I mentioned this in my video earlier today. This is called as a bullish harami pattern in the Japanese candlestick pattern. And this is a precursor to upward movement. So I'm expecting that overall IMTX is has got good pedigree, and it's definitely going to do well in the share market. And now if you look at the highest price that IMTX has ever had in its lifetime, that happened somewhere on 17th of May 2021. And since then, we have dropped almost 36%. So we have dropped 36% from there to the current market price. So there is still a lot of upward room available for us as the sentiment in the market improves. So I would expect a bit of consolidation before further move upwards. But I'm thinking that this particular diagonal line of support is going to be our first line of defense. And ideally, if that fails, then we have the second line of defense out here, which is this diagonal line of support. I'm just going to thicken it up a little bit so that you can see it. We also have multiple levels of support out here with the 20-day exponential moving average, 200-day exponential moving average, and the 9-day exponential moving average. So that's what we have in store. And also, if you look at the momentum out here, it's above average and it has turned back upwards. And I'm sure that will lead the MACD also to turn bullish going forward. So with that said, I would like to bring this video to an end. Friends, if you like this video, please press a like out there. It will help the channel a lot. And if you are not yet subscribed, please subscribe. It's absolutely free. Subscribe and help us grow this channel and bring to you more videos on genomics and thought-provoking videos on geopolitics, as well as other aspects of the market. Thanks and have a great day. Bye for now and enjoy your weekend.